So going back out here to, they don't act, I didn't have an example in here where we actually complete the worksheet, but they have a list of accounts here that, and they're just asking, would this end up in the balance sheet portion of the worksheet or the income statement portion of the worksheet? And then, and which column would it end up in? So looking at that, where would service revenue end up? Income statement or balance sheet? Income statement, right? And then is a service revenue account, is that going to be a debit or a credit? Credit, right? Yeah. What about accounts payable? Where's that going to go? Balance sheet, yep. And debit or credit? Credit. So just always remembering. So that's debit side, this is credit side. So if we have revenues are increasing that in our debit or credit, and then expenses are decreasing that in their okay. Cash, balance sheet or income statement? Balance sheet, and that's going to be what? Debit. Depreciation expense for a building. So we've got two lines here that both mention depreciation, right? One is accumulated depreciation and one is depreciation expense. Which one of those is the pile of depreciation that builds up over time? Accumulated, right? So when things accumulate, they build up over time. So where we track it over building up over time would be on the balance sheet. So accumulated depreciation. And then where we just expense the portion, like we take the little part that we're expensing and including against our income for each time period would be our depreciation expense. And that's so income statement. Now, depreciation. So when we record our journal entry, we actually would record it between these two accounts, right? We're going to debit one and credit the other. So which one ends up being the debit column? So this is one of those loaded questions where it's like, okay, let's look at it. All right. When we are on our balance sheet, we've got our assets here, right? We've got our property, plant, and equipment here, which has what? A debit or a credit balance. Like overall, when we record equipment or property and it's an asset, is it a debit or a credit balance? Debit, right? So when we record our accumulated depreciation, we say less accumulated depreciation, right? So would that, if that is going the opposite direction, what would that then be? A debit or a credit? A credit, right? So if the asset is a debit and the accumulated depreciation decreases the balance of it, it would be a credit because it's a contra account. So remembering that part, that tells us that when we make our depreciation journal entry, the one that's getting credited is going to be the accumulated depreciation account. So we would debit depreciation expense. We'll say $100, and then we would credit accumulated depreciation on this line for 100. And that same thing follows true when we're doing the worksheet here. So the expense would be the debit column, and then the accumulated depreciation would be the credit column. All right, so this last one is our dividends, right? Where do those go? Income statement or balance sheet? So that one is sort of a tricky one because we're looking at this is something that pays out of our retained earnings, so it would ultimately flow through our balance sheet via the statement of retained earnings. So it might not even actually get listed out straight, but this one would be a debit because it reduces our retained earnings. Okay.